about their new order just last week. So that stock is still in focus. Look at water-based. I mean, some of these shrimp feed companies used to be the sort of cynosure of all eyes back in 2017, and some of that is coming back on the screen as we speak. So that's how it is. Overall, we're still holding on to gains of about 60 odd points on the market. PSUs are really firing away. ONGC, Coal India, IOC, and this is a consistent trend. In December, there's a lot of PSU sort of stock gathering that seems to be going on for the time being. 13,573, the market holding bulk of that opening gap that we got right at 9:15. So let's quickly take it to our technical experts for a view. Mitesh, so now we've got the gap. How do we approach the rest of the day?
So it'll be two things. One, I think 13,580 has been the hourly closing in the last two occasions we've been here. So we're just waiting for 13,600 to be taken out. But on stock specific basis, I think the positive activity continues. Top of the list would be Cipla, which is open with a gap up and is seeing a good follow through. I think that's starting a trend which could see it reclaim or at least retest the earlier highs of 820, 825 zones.
Okay. All right, gentlemen. Sorry, Rahul, any other stock you want to speak about? Okay, I think Rahul's not able to hear us. Let's thank our technical experts, and I hope Rahul also hears that we are grateful for staying with us through pre-market. And now let's welcome our market master for the morning, Manishi Raychaudhuri, Asian equity strategist, Equity Cash, Asia Pacific, BNP Paribas joins us. That's a long designation, Manishi. Good morning. Thank you very much for joining us. You know, we're getting money hand over fist. So is it good to just enjoy the trend? Don't ask questions on valuations. Just go ahead and buy. Is that what you recommend?
You know, that kind of a attitude to equity markets have always been risky, as we have known by experience. I would suggest to, as we've been telling institutional investors, that they should enjoy the ride, but mind the bumps. So for example, there are quite a few things, quite a few stars which are aligning for Asian emerging markets as we approach 2021. Number one, vaccine-driven broad economic upturn seems to be on the cards right now. Second, the US dollar is likely to continue to weaken, and that's a serious tailwind for flows into emerging markets. We're already beginning to see that over the past couple of months, and we think that's likely to continue over much of 2021. Third, we are seeing upturn in earnings estimates, and that has become broad-based. And this is a point I've been making for quite some time now. If I move back about a couple of quarters, that earnings inflection, positive inflections would have been noticeable only in TMT and healthcare. Today, it's broad-based across materials, energy, financials, possibly even industrials. And that's true not only of India, but across the Asian emerging market universe. So I think, good times will last for now. Valuations are expensive, particularly in the context of India. But at the same time, in an environment of increasing earnings estimates and low cost of capital, what appears expensive today might appear relatively cheap a few months down the line.
Okay. Manishi, good morning. So tell us, I mean, given this run-up, there's also been a lot of talk about sector churn, and we've seen that, right? The leadership mantle keeps shifting from pharma and IT at the start of the rally onto the unlocked trade, and now a lot of people are talking about cyclicals. So how would you look at portfolios and positioning now?
Right. So, our portfolio positioning in the Asian context, we prefer to call it a feet in two boats or a barbell strategy. So we are incrementally moving into the value stocks. We have increased position in materials, in some pockets of industrials, also consumer discretionaries, the classic value picks. We have always had, in the context of India, a reasonably good allocation to financials, particularly private sector banks and insurance companies. That said, we're not really taking our foot off the pedal as far as the tech mega trends are concerned. And we believe that some of these mega trends shall last, over 2021 and beyond. Many of these pertain to internet, e-commerce, or tech hardware in the North Asian context and IT services in the context of India, we're noticing that some of the frontline IT service companies are actually scoring very good deal wins with the developed market companies. And we think that trend is here to stay for some time.
Manishi, hi, good morning. What about the trend in commodities, especially ferrous metals? Because, prices have been strong, demand has been very good, but stocks have also run up quite a bit. Many of them doubled in the last 3-4 months. Is this the start of an upcycle, and would you put more money to work here?
We personally do like the ferrous or perhaps even the non-ferrous metals sectors. We think that one should be selective in this sectors, or in general in the material sector, purely because the different companies have different balance sheet strengths. Some of them are possibly over leveraged. No doubt they will attempt to sort of deleverage their balance sheets going forward with the cash that they generate. But I think there is scope for investors to be a bit selective in these sectors. But at the same time, I think one should increase positions in the materials sector right now.
Okay, actually, that's what I was going to ask you, whether metals are your favorite. I saw your list. India comes fairly high in terms of your overweight, but you're looking at, like you said, technology stocks and consumer staples. You have not spoken about capital goods. We are seeing a bunch of orders coming in, also because of India's PLI scheme. So I wanted your view on capex-related plays like capital goods and also these PLI plays.
All right. Now, typically in any economic cycle, we first need the companies to generate cash and then to invest that cash into capacity expansion. So when one looks at it from that perspective, the industrials are typically the late cycle recoverers. So it's the commodity companies, the consumer companies, which would possibly need to repair their balance sheets first. Then they would expand their capacities. Right now, capacity utilization on the whole is still quite low. It's hardly about 70 to 72%. Therefore, we think that, recently, of course, there has been quite a lot of news flow about new orders coming in. And the select few industrial companies have benefited on that count. But if one really looks for a long and sustained upside on the industrial space, maybe there would be late cycle recoverers, and the early cycle recoverers are what we're playing now. The consumer companies, the materials companies, and so on.
Okay, got that. So Manishi, what do you think about the financial sector now? It's gone through its own issues, and the larger understanding is that perhaps the NPA problem isn't as bad as what we were worrying about, let's say in July or August. So how do you look at banks and NBFCs?
If one listens to the commentaries that are coming in from the frontline banks, particularly the private sector banks, one would get the impression that the corporate NPLs, the worst of corporate NPLs, are possibly behind us. And we tend to agree with that prognosis. The concern, as some bank managements have expressed recently, and I would say they're still in a minority, but there are a few who have said so, are on account of the retail NPLs. Having said that, we believe that there is a way that investors can avoid that pitfall also by focusing on those banks which have a relatively lower portion of loans under moratorium. And those are the select few private sector banks which we are playing right now. Within the financial sector, we also count the insurance sector. We view it very positively because I think there's a lot of catch-up that the Indian insurance sector has to go through as far as penetration is concerned. So, I would say that both private sector banks, the ones that have relatively low proportion of loans under moratorium, and the insurance companies, would count, we have incrementally added to the housing finance companies also over the past 2 months. We are seeing a small upturn in the real estate side, but we would rather play that through housing finance companies right now. So yes, I mean, we do have a broad footprint across the different spectrums of the financial sector in India. Private sector banks, insurance, and HFCs, the frontline HFCs, would clearly fit the bill.
Okay, this has been quite a good month even for many of the auto stocks. Actually, the last couple of months have been very good. Maruti, for example, is up in double digits in the month of December. Would you incrementally add to any of the market leaders in the auto space? And if not, anything else that you like in ancillaries?
Well, we do like the market leaders in the auto space, particularly in the four-wheeler passenger segment. We are not so bullish on the two-wheelers yet, even though they have had good numbers in the festive season, because we think that there's a degree of filling of the channel that possibly came through on the two-wheeler side. But in the four-wheeler side, we do remain positive. We have a presence on the market leaders in four-wheelers in our Asian model portfolio. We will possibly not incrementally add to that. But yes, I mean, I do think that investors need to keep that space on their radar.
What did you say about real estate? Are you buying it now?
Not the real estate companies, but we would play that sector through the housing finance companies, particularly the market leaders again. As we know that in general in India, currently there's this phenomenon of big getting bigger, the large companies gaining market share. And even within the housing finance companies, this is a phenomenon that we're seeing, and we would continue to play that.
Okay. Well, thank you very much for joining us, Manishi, with your thoughts this morning and with your report for 2021. So the big statement coming from BNP Paribas India is a big overweight for them. And within that, the TMT stocks, the technology stocks, energy, materials, consumption are the themes they are playing. Capital goods will have to wait a bit, is what Manishi is saying. At the moment, the markets have not really given up their hold. It is still pretty close to the 13,600 mark, the Nifty. A little off highs, but by a few points, that's all. But the breadth of the market is very impressive. About 4 stocks in the green for 1 in the red. Well, let's do one thing. Let's take a quick break. We are going to have a very important discussion coming up. When we spoke with Bajaj Auto last week, they said, yes, semiconductors is a problem, but getting containers is a bigger problem. There is a huge logistics issue in getting containers to ship them to the ports, to ship their exports to the ports. We're going to speak with people who would know this very well. S.S. Gill, the Senior Vice President and Head International Business at Volvo Eicher, VE Commercial Vehicles. Mahesh Kayal, the Vice President at the FIO, Federation of Indian Export Organizations. And Sunil Vaswani, the Executive Director at Container Shipping Lines Association. In a minute after this break.